Welcome back to The Contrarian, everybody. I'm Logan Moody. Today I'll be taking a look at home builders and why I believe home builders and home builder stocks could be some of the best ways to short the housing market right now. Now, if you're like me and you see the upcoming year as one of increasingly economic slowdown, but especially slowdown in the housing market, then you probably are wondering, well, what could be a good way to go short housing? Last time, it was likely going short, overvalued home builder stocks, mortgage lending companies, and banks especially. But what could be a good thing to go short right now? And it turns out that home builders are very backward looking in terms of their valuation right now. So I'll take a look into the valuations of a lot of home builders, explain why they are not being valued with how the housing market is currently collapsing, and how they'll likely have a catch-up sell-off later on this year. So taking a look at all of these major home builders, whether it's KB Home, Toll Brothers, D.R. Horton, Lennar Corporation, Polt Group, any of these major home builders out there, they have actually all seen significant rallies in the last 6 months, or 4 or 6 months type time frames. And their stocks are close to trading to all-time highs. In some cases, they are at all-time highs, but in most cases, they're pretty close. Now, this is all coming on the back of the housing market being in a severe contraction in terms of activity, generally being very slowed down. So you might be wondering, well, how are these stocks trading at these close to all-time high valuations? Why is everybody buying them up right now? And it actually has to do with the fact that the PE multiples on practically all of these companies are in single digits. They're very cheap compared to the rest of the stock market. Now, the valuation the stock prices on these companies have been given has to do with the fact that all of the earnings coming in on the quarterly earnings reports that these companies have released for the last 6 months to a year are actually reflecting data from contracts that they would have signed anywhere from a year to 2 years ago, that completed about 6 months ago, and so it's very backward looking. In other words, the sell-off in houses and actually the stagnation in the housing market really has yet to catch up with these home builders, and so that's a major opportunity in my mind to go short stocks like this that people are buying up right and left right now. It seems to be very cheap. Hedge funds are tending to allocate capital towards it because they see it as a good bet right now. I'm simply pointing out that the fundamentals that these companies are based off of are beginning to grow ever more weak, and it's actually going to take time for this to be reflected in the earnings reports that these companies release. So the reason for going short any of these stocks would be because you believe the housing market to undergo further contraction, activity to fall, and more so for new development activity to fall as well. Now, this is probably where I would say the meat of the case for going short of these on these stocks would be, is the fact that we still have a lot of homes that are currently being built that were signed into contract, that these companies basically said, okay, we're going to construct this new development, and this could have been anywhere from 2 years to 1 year ago. There's still a lot of these homes that have not been completed yet that are going to be completed in a scenario where there's a lot less buyers in the market willing to step in, and so that's going to bring the prices down at which these homes are going to be able to be sold. When they finally do get sold, they're going to be at a lower price than what was initially being expected when these contracts were first initiated, and that's also going to bring down interest that these companies have in starting new projects. Is definitely going to bring that interest down, because they're going to be saying, hey, we're actually going to be earning a lot less, or maybe even taking a loss on this development project that we started a year ago. We don't really want to start anything right now because we don't know how much more the economy is going to worsen, how much worse the housing market's going to be in terms of the prices we can get for these houses. So we're not going to start anything new, and that's going to bring the valuations down on these stocks very significantly, in my opinion. And I do not think that they accurately reflect the current economic conditions, even as they are right now, in terms of the housing market, and it's likely going to get worse in the housing market before it gets better. It's definitely a case of leading and lagging indicators. So the housing market lags the actual economy where it is right now. It takes the housing market and mortgage rates a little time to catch up with that, but it's maybe 6 months behind the actual economy. And then home builders are behind the housing market itself. So you have to think almost further back, more like a year ago, where home builders are actually experiencing their current earnings, current business model, current economic reports that they put out. That's based almost a year ago. So it's kind of a case of leading and lagging indicators. Now, obviously, I'm not saying you should go short these stocks right and left. There's probably some better ones to short than others. I myself am still actually deciding which ones I'll go short. It's probably going to be a little while as well until it begins to actually catch up with these home builders. So it might actually be a few more months until I end up going short some of them. But all of this being said, I really wanted to put this out there so that you guys can see what I'm maybe thinking right now, what could be a good play to go short housing right now. You obviously might disagree with me. You might say, hey, Logan, I don't think this economic slowdown is going to last very long. I think the housing market's going to rebound pretty quickly from there. So I don't see enough benefit in going short housing stocks, home builders. I totally get that. And by the way, I'm not giving any sort of financial advice in this video. I'm merely putting something out there to maybe let you guys know what I'm thinking and what I probably will be doing in the coming few months. But all of that being said, I'd love to hear all of your comments down in the comment section below about the current housing market, about home builders. Do you think they're actually overvalued? Is the market accurately valuing them right now? I'd love to hear your comments on that. I hope to see all of you again at some point.